Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 3rd of March 2020, and yesterday we published a most important video entitled Gold and Silver Rise as Surprise Rate Cut May Be Announced This Week. We concluded that video with the following words, quote, "We know for certain that as we produce this podcast, central bankers are discussing whether to lower rates this week or not. What we do not know, and will not know in advance unfortunately, is their decision. Our best estimate at this time is that if they do, then we can expect gold to rise even though the dollar may maintain parity. By how much, we haven't done the calculations, but this will act again as a tailwind behind precious metals, which is why, certainly for gold, we are buying on dips right now," unquote. Well, at the time of writing, which is 17:15 GMT, it was announced just 15 minutes ago that the Fed, the US central bank, has cut rates 1 or 2 days earlier than we anticipated, and by 0.5%. thereby reducing the Fed funds rate to 1% to 1.25%. This emergency move comes after the G7 group of finance ministers pledged action after warnings that the slowdown from the outbreak could tip countries into recession. Federal Reserve Chair Jerome Powell said at a press conference in Washington today, quote, "The US economy remains strong, but it is difficult to predict the magnitude and persistence of the effects of the spreading virus. The measures that are being taken to contain it will surely weigh on economic activity for some time, both here and abroad," unquote. Also today, we have seen Australia and Malaysia also cut rates. And the G7 finance ministers have pledged to use, quote, "all appropriate policy tools," unquote. Yesterday, the Organization for Economic Cooperation and Development warned the global economy could grow at its slowest rate since 2009 for this year. It now envisages 2.4% growth in 2020, down from 2.9%, which it anticipated would happen last November, and acknowledged that many countries could be tipped into recession. It is important to bear in mind that the last time the bank made an interest rate cut at an emergency meeting was during the global financial crisis of 2008. Now, we're not suggesting we are there right now, but it's certainly worth bearing that in mind. President Trump, who's been calling for lower rates for some time, tweeted today, quote, "It is finally time for the Federal Reserve to lead. More easing and cutting," unquote. Now, admittedly, we were expecting a cut this week, but a 0.25% cut now, and then a similar one on the 18th of March. But the Fed and other central banks are so concerned about the global situation that the US Fed cut it by 0.5%. And frankly, behind the scenes, and we can reveal this, have not ruled out the possibility of another cut when it meets in a little over 2 weeks' time. They're waiting to see if the 0.5% is sufficient. You may not find that in the headlines. Now, stock markets initially rose on the back of this announcement, but the Dow, S&P and Nasdaq have fallen back since. All of them are currently down between 0.5% and 0.9%, whereas European and UK markets broadly closed up around 1%, but they will respond tomorrow when they reopen, depending on how Wall Street ends this evening. Gold and silver prices jumped on the news, with gold currently standing at $1,643. That's up some $57 than Monday's opening price. And the silver price is $17.25, some 58 cents higher than Monday's opening. Now, we are potentially expecting silver prices to fall back, though. If not in real price terms, then in relative price terms compared with gold. As such, a large rate cut suggests some very serious concerns over trade and thereby the industrial use of silver demand. The gold to silver ratio currently stands a little over 95.2. If you recall, and sorry if we're repeating ourselves to regular listeners, we've been predicting for some considerable time when the gold to silver ratio went down as low as 82 to 1 a couple of months back. We said do not be surprised to see it rise back to 90 to 1, and when it did that, we said it will go even higher. Now, the dollar index has fallen back a little, but not as much as many would have expected. It's down just by 0.16 to 97.2, which suggests to us that some of the other G7 members may also cut their rates very soon, probably tomorrow or later this week. This is why there has not been the drastic sell-off in the dollar that many thought would happen and predicted would happen. Now, of course, if the other major economies do not reduce rates, then of course the dollar will in relative terms, fall. Now, we are expecting some choppiness for both the equity and precious metal markets over the coming days, and we suspect that the US economic data to be released later this week may prove somewhat unattractive, thereby the decision to act now and stem the tide of potential bad news. Now, we are very pleased, of course, to have called the rate cut, but just wish we could have given more notice for buyers to stock up. As we said, we were really expecting it to happen on Wednesday, Thursday at the latest. They've even surprised us, so they've acted far more quickly than perhaps traditionally and reduced rates today. Now, that said, any dips in prices that may occur during this period of what we've termed choppiness should be considered great opportunities for purchasing gold and to a lesser extent silver, although we're still waiting on that if we're truthful, if the global pandemic worsens. Now, on that point, please ensure you stay tuned to our Richard and Greg channel, where we will attempt to provide regular and probably every other day updates on where this global pandemic lies. We're producing that subject on the Richard and Greg channel rather than this one because we have received a considerable number of comments stating that you, our listeners and subscribers, wanted this channel to focus primarily on precious metals, and even though we will, of course, cover those issues that affect their price, something such as this is better relayed elsewhere, because not everyone will wish to listen to it for a start. Now, what we have done is place links to that channel in the description box below. It's going to be an exciting week this week. There is a lot of economic data due out, as we mentioned in our weekly update on Saturday, which includes tomorrow the ADP employment report, which will give us some indication, not a guarantee, but some indication as to the non-farm payrolls, which is going to be announced on Friday. But we also have the Market Services PMI and the ISM non-manufacturing index, both of them for February, being announced tomorrow. And then on Thursday, productivity and unit labour costs for quarter 4 and factory orders for January. And then Friday, the biggest day, non-farm payrolls, unemployment, average hourly earnings for February, the trade deficit, wholesale inventories and consumer credit for January. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. And please do go over to the Richard and Greg channel and subscribe there. So once again, you may be notified of those videos as and when they are published. as well. Thank you so much for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.